34 days of homeowners insurance, day number 1. If you suffered a loss today, fire, tornado, hailstorm, whatever it is, you're gonna wanna put all the pieces back together as fast as you can, right? Replacement cost versus actual cash value. It's extremely confusing and yet very important if you're a homeowner. A simple way to remember it is replacement cost is going to repair or rebuild your home just like it was before the loss, new for old. Of course, it's going to be subject to your deductible. Now, actual cash value will be replacement cost minus depreciation, and you're still subject to a deductible. So let's break it down like this. You put a new roof on your home. It has a 20-year lifespan. 5 years after you put it on, a hailstorm hammers your roof. The cost to replace the roof at the time of the loss comes out to $10,000. And your deductible is $1,500. If you have replacement cost coverage, this is what it's going to look like for you. $10,000 to replace the roof, minus your deductible of $1,500, leaving you with $8,500. And that is what the insurance company is going to pay to replace your roof. Now, on the flip side, if you have actual cash value, this is what it's going to look like for you. Just like in the first example, it's going to cost $10,000 to replace your roof, minus 25% for depreciation. Your roof is 5 years old now. Then take away $1,500 for your deductible, leaving you with $6,000. So it's important to know the difference between replacement cost coverage and actual cash value on your homeowner's insurance long before a loss happens. So my name is Brandon, and this is day number 1 of 34 days of homeowners insurance.